Hey, curious minds. Do you know what is the meaning of payroll? Payroll is nothing but payments done on a roll by the employer to the employee. What is that roll? Roll is nothing but the employer paying monthly or daily or weekly salary to the employee. That is called payroll. Come on, let us master the payroll journal entries. How to do it? I'm sharing my screen right away. Yes, I think you can see my screen. So the company name Fincurious Private Limited has the following transactions. So based on these transactions, we are going to pass the journal entries. What is the first transaction? The first transaction is salary paid to the employees for the month of April 2024 in cash on 1st May 2024. So basically, when the salary is paid, that means the salary will be paid either in cash or through bank. So in this case, what is happening? It has been paid through cash. But here you need to pass two journal entries for this particular transaction. Why? Because first transaction you need to pass the due entry. So in the month of April, you need to know what is the due amount you're going to pay salary to the employees. That is on last day of the month, that is on 30th April 2024, we are going to pass the due entry. The salary account being as an expense, it will be debited to salary payable account. So that is the due entry. So you can see the journal entries here on 30th April 2024. Salary account debit to salary payable account. 1,50,000 debit, 1,50,000 credit. So being salary due for the month of April. So in the same manner on 1st of May. So once the due entry is passed, you are going to pass the payment entry. How to pass the payment entry? Salary payable which is credited here will be debited back, and cash being cash only, right? In the question they are telling it has been paid in cash. So that is why to cash account. So salary payable to cash account 1,50,000, 1,50,000. So net of, if you can see, salary account data to cash account only. This salary payable credit and this salary payable debit will be nullified. So this is how you are going to pass the journal entry. So let us pass the same entry in Tally also. So from gateway of Tally, I am going to vouchers. In vouchers, I'll press F2 to change the date. But unfortunately, we are using educational mode, Tally in educational mode. That is why 30th April cannot be entered here. If I press 30th April, it will not take. So what I need to do, I can take 1st of May itself. Then it will take. So now what is the account I need to debit? Salary account I need to debit. Salary account is debited with 1,50,000 and credit cash account with 1,50,000. So being cash paid, enter, accept. So that is normal salary payment entry. But I shouldn't have done that, right? Because here we are telling to pass the due entry. Here I have mistakenly passed the entry, right? So how to rectify it? I'll again go to display daybook, open this, and here I can edit this credit to salary payable. So here being due entry passed for the month of April 2024. But this is not under the payment voucher. So which voucher I need to pass? This will I need to pass in F7. Okay, that is journal voucher. So control A. So you can see now in the journal voucher, salary account data to salary payable account credited. Perfectly correct. So this is how, even though if you do the mistakes, you can rectify in Tally. So now we need to pass the payment entry. What is the payment entry? Again, we need to debit it back the salary payable account. So in which voucher? I need to go to the payment voucher. Date, it is 1st of May only. Salary payable account 1,50,000 debit, credit, cash account. So negative cash will come, no problem. Just ignore and accept it. So now the second entry. What is the second transaction they are asking in the question? Salary for the month of May 2024 paid through SBI Bank. So this time they are paying through the SBI Bank on 1st June. Obviously, for the month of May, 31 days would be there. On 31st of May, they will pass the due entry. On 1st of June, they are going to pass the payment entry. So let us do the calculations now. What is the who are the employees here? Adarsh Roy, Ankita Sharma, Monish Bhattar. So if you add these three, 60, 70, 20, that also sums to 1 lakh 50 only. Where in the previous month also all together we have passed 1 lakh 50, but this month we are going to pass it separately. So FinC, what is this FinC 001? This is employee code. Basically, in every company, there would be one employee code allocated to each employee. So it would be easy for us to identify the employee with the employee code. That is why this employee code has been given. So in Excel, if you see on 31st of May, the salary due entry has been passed. Salary account data 1 lakh 50 to FinC 001, otherwise salary payable account. Why salary payable account? Here also you have done salary payable only, but here from May month, we want each and every employee name properly to be credited. So FinC 001, otherwise salary payable account 60,000. FinC 002 Ankita Sharma salary payable 70. FinC 003 Monish Bhattar salary payable 20. So this is the due entry, and on 1st of June we pass the payment entry through bank being salary paid for the month of May. So all this credit salary payable account will be debited and credit would be SBI bank account. Being the asset is decreasing, that is why we are going to credit it. So now I go to the tally. In tally, I need to pass the due entry first. In which voucher I pass the due entry? F7, journal voucher. Change the date. What is the date? 31st May. So on 31st May, what is the entry I need to pass? Salary account debit 1,50,000. Credit. Who is the first employee? 001. FinC 001 with the amount of 60,000 rupees. Then 002. Who is 002? Ankita Sharma with amount of 70,000 rupees. With amount of 70,000 rupees. Then 003. Monish Bhattar with amount of 20,000 rupees. Correct. So narration being salary due for the month of May 2024. So by this we have successfully passed the due entry. What about the payment entry? That should be passed on the 1st of June. So in which voucher? Payment voucher, F5 voucher. What I need to debit? All the salary payable accounts which I have credited in the previous entry, I will be debiting it back. 60,000. Again debit 002. 70,000. Again debit 003. Monish Bhattar 20,000. Credit SBI bank account. So being salary paid. So by this, we have successfully completed two transactions. So first transaction is done, second transaction is done. So in the third transaction, they are telling us to pass the entry when the company has taken PF ESA registration on 1st of June 2024, pass payroll entries for the month of June, considering PF ESA and TDS also. Okay. So basically, what is this PF and ESA means? PF is Provident Fund. So if the company is taking EPF registration and ESI means Employee State Insurance. If the company is taking these two registrations, then they compulsorily need to show that PF and ESI deductions in the transaction itself. So now how to find out that? So I'll open this CTC structure so you will get a better idea of what I'm doing. So you see here, right? So Adarsh Rai is getting 60,000. This 60,000 is nothing but gross salary. So if this 60,000 is the gross salary, you can see 50% of the gross salary. CTC structure of this company is like this. You can see here basic 50%, HRA 40% of basic pay, other allowances 30% of gross salary. So CTC structure has been given in the percentage of gross salary, basic 50 of gross salary, other allowances 30 of gross salary, and HRA 40 of basic pay. So this is the company's policy about the CTC structure. So we need to follow the same structure for this particular company. So if you are following for the different company, so different companies might be having different CTC structure. Depending upon the CTC structure, you need to calculate these things. So now for this FinC 001 ID employee, who is that ID? Adarsh Roy. For Adarsh Roy, we are going to calculate the basic HR and other allowances. So 60 is the gross salary. So 50% of gross salary, 60 into 50% is 30,000. And then HRA is calculated 40% of basic pay. So 30,000 into 40% is 12,000. And 30% of gross salary is other allowances. So if you do 60,000 into 30%, that will come 18,000. So even if you add these three, you get 60,000 only, which is again here 60,000 matching. So these calculations are absolutely correct. So in the same manner, you do for Ankita Sharma and Maunish Bhattar. So 70,000 and 20,000 basic HR and other allowances, you will do it and as per the CTC structure given in the question. So now the most important thing we need to understand, what are these EPF and ESI deductions? So from gross salary, the employer deducts some deductions. That is called employee deductions. How he will deduct? So 12 EPF. EPF means Employee Provident Fund. It will be deducted 12% of basic salary. So what is 12%? 30,000 into 12%. But the maximum is restricted to only 1,800 per month. So even though if you do 30,000 into 12%, how much it will come? It will come around 3,600. You cannot claim 3,600 as a deduction. Why? Because as per the EPF Act, it gives the maximum amount, restriction amount to only 1,800. So maximum it is 1,800 only, the deduction. That is why here you can take maximum 1,800. You can see we have used here the if formula. So here we have used the if formula and did this. So maximum is 1,800 per month. But here it is 1,200 because here the basic salary is only 10,000. So on 10,000, 12% is 1,200. So this is how we calculate EPF deduction. And what about ESI? ESI deduction, employee contribution would be 0.75%. Okay. So employer contribution, you can see 3.25. Employee, it would be only 0.75. Both put together 4%. And employer contribution to PF, employee contribution to PF, it would be 12% and 12%. Okay, but there is another one condition. This ESI, it is charged only if the gross salary is less than 21,000. If it is gross salary is more than 21,000, ESI is not applicable. So you can see here the amount 60,000 is more than 21,000. That is why ESI is not applicable for first employee and second employee. Only for the Maunish Bhattar, third employee, it is applicable. 150 rupees is calculated. How it is calculated? On gross salary, 20,000 multiplied by 0.75% will give you 150 rupees. So now from gross salary, if you deduct employee deductions, CPF and ESI, you will get net salary. So this is the net salary. It has to be paid to the employee by the employer. But before that, we need to even calculate TDS per month also. How TDS per month is calculated? We will go to the TDS calculations. So you can see here. So FinC 001 Adarsh Rai, net salary per month is 58,200. So from CTC structure, you can see 58,200 is per month salary. Per annum, it would be 6,98,400. Under the new scheme, till 7 lakhs, there is no need to pay any taxes. Whatever taxes will come, all amount of tax can be availed as the rebate. So there is no TDS per month for the Adarsh Rai. Next, Ankita Sharma. So Ankita Sharma, she needs to pay the taxes. Why? her monthly salary is 68,200 and the net salary would be 8,18,000, which is more than this one, basic 7 lakhs. Under 7 lakhs, if it is there, then only this rebate will come. Otherwise, TDS per month has to be calculated. How this TDS per month is calculated, you can see under the new scheme. See, even here we have calculated under the old scheme also, but under the old scheme, the tax per month is higher. So that is why it is beneficial for Ankita to opt for the new scheme so that she can pay only less tax to the government. So till 3 lakh it is zero. From 3 lakh 1 rupee to 7 lakh it is 5%. 4 lakhs balance into 5% is 20,000. And from 7 lakhs to 8 lakh 18,400 it is 1 lakh 18,400 into 10%. That will come you 11,840. Both put together 31,840. Add cess will give you 33,114 tax liability per annum. So there is no rebate going to allowed, and TDS per month would be this 33,114 divided by 12 is 2759. So that 2759 is the TDS per month for the Ankita Roy. Sorry, Ankita Sharma. So then last employee Maunish Buttar, his income is only 2 lakh 23. It is less than 2 lakh 50 in the old scheme and less than 3 lakh in the new scheme. There is no tax for this fellow. So that's why there is no TDS deducted. So take home salary for each employee would be 58,200, 65,441, 18,650. So then what is CTC, cost to the company? So this is for the employee perspective. Then what about the cost to the company? Very simple. The gross salary calculated here 60 70 20 is cost to the company. Add employer contribution to the PF and employer contribution to ESI, just like 12%, maximum of 1800 or 1200. And here employer contribution to ESI will come 3.25% of gross salary, which is applicable only if the gross salary is less than 21,000 again. So for this first two employees, there is no ESI contribution. Only for the Maunish Buttar, 650 rupees is allocated. So if you add all these things, the cost to the company for the each employee would be like this. So this is the overall concept of salary structure and how you calculate the EPF and ESA calculations. So that is what they are asking in the question, right? The company has taken PF ESA registration. So if the registration has been taken with effective from 1st of June, we need to calculate that amounts. So for that purpose, we have calculated CTC structure and TDS calculations. So now we'll pass the journal entries. How to pass the journal entries? So same concept again, on 30th of June, which is the last day of the month, we are going to pass the due entry, and the first day or whenever the payment is going to happen, on that particular day, the payment entry we are going to pass. So let us open the tally now. In tally, we need to pass due entry. The due entry will be passed in the F7 general voucher. And date, if you take again 30th of June, it will not allow you to take because it is educational mode. We are using it in the educational mode. So again here I will take 1st of July. So 1st of July, what is the entry? Basic salary, how much? 75,000. So how this 75,000 came? So in the CTC structure, if you go, the basic salary 30, 35 and 10. All the three employees put together is 75,000. So here the total 75,000. Then debit again, HRA account, how much? It is 30,000. Then debit again, other allowances. How much? 45,000. Then debit, okay, no debit again, credit EPF employee deduction. EPF employee deduction. How much? It is 4,800. Then again credit ESI employee deduction. ESI employee deduction, that is 150 rupees. Then TDS on salary. TDS on salary. So this is 2759. So all these calculations, how I got to know from this TDS calculations and CTC structure. You can see here from this CTC structure, I have calculated and kept the pass the entry here. From here, I am doing it from the to the tally. So here credit again TDS on salary. Again salary payable account to Adarsh Rai salary payable. So the balance amount we need to pay, right? How much? 58,200. So if you come to the thing, you can see take home salary 58,200, 65,441, 65,441, 18,650. So 65,441 and 18,650. This is the take home salary for these three employees. So salary payable, Adarsh Roy, it is 58,200. And then 002 Ankita Sharma, 65,441. And then 003 Maunish Bhattad, 18,650. So this is how we are going to pass the due entry being salary due for the month of June 2024. So we passed the due entry. So now how to pass the payment entries? We need to pass the payment entries, right? So before passing the payment entries, we need to pass another due entry. What is that another due entry? So in the CTC structure, if you remember, apart from this EPF, ESA, TDS, we have even calculated employer contribution also, correct? If you're contributing to PF and ESA by employer is also contributing, for that also we need to pass the entry, right? So for that also we need to pass the due entry first on 30th June itself. But being in the educational mode, I pass in the on the 1st of July. So same EPF employer contribution account 4,800, and then ESI employer contribution account, how much? 650. Credit EPF employer contribution payable account. Why payable account? So whatever contribution is there, that is an expense booked debit side, and payable account is there, that is a liability. If the liability is increasing, we are going to credit it. So employer contribution payable account 4,800, and then ESI contribution payable account 650. So being ESI EPF due for the month of June. So this is how we pass the due entry for both basic salary and salary payables, and for the EPF and ESA contribution by the employer. Now we need to pass the payment entries on the same 1st of July itself. So now payment entries, I go back to F5 voucher. In F5 voucher, I'll pass all the payable entries. So 001 is Adarsh Roy salary payable account. How much I need to pay? 58,200. And then debit 002 Ankita Sharma, that is 65,441. Then debit 003 Maunish Bhattad, that is 18,650. Credit SBI bank account 142,291. So here being salary paid for the month of June. So this is how we are paying the salary to that particular person. So now we need to pay this all these deductions to the government also, right? So on or before the due dates, we are going to pay the amounts to the government. So on 1st July only, we need to pay this payment entry. So because in the transaction, they are telling pass the entries. Okay. So now we are assuming that they have paid everything on 1st of July itself and debiting it on the 1st of July. So what are the payable entries? EPF employee deduction account. How much amount? That is 4,800. So you can see whenever you are debiting back the liabilities, the current balance of the liability would become zero. Then ESI employee deduction account, that is 150. Again, it has become current balance has become zero. Again, debit TDS on salary, that is 2759. Debit EPF contribution payable account, that is 4,800 again. Debit ESI employer contribution payable account, that is 650. So now you can see all the liabilities which have been credited before, now I am debiting it back. So all the current balances of the liabilities would become zero. So now I do it to the SBI bank 13159. So this is how I am going to pass the due entries and payment entries for the payrolls being payables, paid, being payables, paid for the month of June. Done. So by this, we have completed passing the entries for the given transactions. So this is how we are going to master the payroll entries using the Excel and Tally. I hope you enjoyed the session. If you still have a doubt, you can please ask your doubt in the comment section. And if you want this Excel sheet workings, you can ask in the comment sheet. We can pin it in the comment section. Thank you all for joining the session. Bye bye.